You know how to do it, so
Welcome to Momentum Monday. Today is March 27th, 2022. Howard, how was your trip?
did I go somewhere?
I don't know, but you went away with a t-shirt and you came back with a shirt. So something must have changed. Maybe they switched you in Israel, which
You
was
know, I had we have our LP event, so I actually wore a nice shirt, but I can't promise you that I'm wearing pants, and you don't want to know.
That's true.
The so we're having problems with the video. You're saying like it's not. Yeah, people should see the charts.
We're not having problems with the video. It's just the way our faces are shown in the upper right corner. They're kind of take away a bit of the chart. So that's why I'm just gonna put it down so people can only hear us and see the charts, right?
All right. Well, there's got to be a way to put us in the bottom left-hand corner.
I mean, I can move it myself, but the way it shows on the video is always in the upper right. So I guess I need to figure it out. As of right now, we're just gonna go without us and just the sound.
Sounds like we're a little bit poor at technology. So how are you doing? How's your week?
Pretty good. I mean,
you carried the show. I missed my first weekend like forever.
I mean, it happens, everyone is busy once in a while or tired. The market have been bouncing, and the rally has been spreading into more sectors. And ever since, I mean, even a little bit before the Fed announced the 25 basis points interest rate increase, stocks have been rallying. And I think the major reason behind that is that the market believes that the Fed is just not aggressive enough. We have double-digit inflation, and the Fed only raises by 25 basis points, and potentially threatening that they'll start raising every month by 50 or so. I think the market is calling a bluff right now, and he's saying that, you know what, there is a recession right around the corner. Looking at the 2 and 10-year bond yields, yield curve inverting. So the market is kind of expecting slowdown. So the market really doesn't think that the Fed is going to follow through with the aggressive interest rates increases. And this is why we're seeing this rally in stock. I mean, anything that was hit and not only bounced significantly. Obviously, the leaders remain the same. Energy. Like on Friday, I looked at the year-to-date performance, and I saw the energy sector, the XOE and the XOP, they're both up 40% year-to-date. Yeah. And then the metals, XME, also up 40%. Yeah. Financials are about flat for the year. And then the Nasdaq is down around 10%. And the cloud stocks are down around 20%. That's year-to-date. So, which is kind of what you can expect with bonds getting absolutely crushed and interest rates going much higher.
Yeah. No, I've probably had my worst, it's a year of underperformance. And again, I'm not like truly trying to compete against a benchmark, but I truly know that I'm underperforming just because I'm down, over the last 12 months. And I'm pretty conservative. I don't do bonds. So like whatever I'm a high cash position for the last year, but I'm still trailing. So I haven't figured it out. I mean, I was talking to a bunch of energy people at my event and agricultural people who are LPs of mine, and asking them for their favorite ideas. And 3 of them were copper and 2 were coal. So,
yeah, I mean,
like,
those
I was looking at Arch Coal. I mean, look at this thing. I can't buy this. Like that'd be like buying Zoom at $500, in my opinion. But I was talking to some of the commodity guys, and they're saying this is going to go on for 10 years. Like this, we are so under.
Yeah, it's possible.
It'll be so hard for us to get these mines back in operation, to convince people with the liability. Anyway, way over my pay grade. I'm just listening intently to some of the old traders of commodities just say it's not so much that demand came back in such a strong way. It's just because of green policy and everything that you can't get the supply going and the liabilities. So that, anyways, you this is wow, look at these charts. This is incredible. You're flipping through them.
These
So
are all
I assume
the
people are
calls.
seeing these charts, right?
Yeah, they are there. They're only seeing the charts. They don't see us.
Yeah, 30 baggers. Obviously, you had to time this. But at some point mid last year, it looks like June, you had to, and shame on me, they were showing up on it on the all-time high list. But I would say June of last year,
The
there was a
52
lot of
yeah.
great entries. There's just, March was like, okay, but June. So people that think that these are what non-V bottoms look like, and this is what's going to happen in growth tech. Like all these people expecting these growth stocks to recover are going to be in for a surprise, right? Because we're just starting the tightening cycle. Like you said, Ivan, at best case, I mean, they're trying to be conservative, but they're way behind the curve. So this cycle could go on a lot longer with 25 basis
I mean, we
points.
know that the Fed can easily manage recession and economic slowdowns, but we don't know how if they can handle high.
But this is with
inflation
nobody
rates.
paying debt. Like student debt has been 2 years of kids not having to pay student debt. So it's like we haven't even started turning on the systems yet.
Yeah,
right.
and I forgot to mention actually that the worst performing group year to date are home builders, down 24%
Yeah.
year to date.
And that just makes sense. Listen, they had a great run. They home prices are at kind of all-time highs and interest rates are going up. There's not a perfect condition. And they don't want to put stuff. I don't even blame the home builders. Why would they want to build stuff that they know that's going to be a disaster? So you've got this tight supply. Maybe the home builders, because the material costs, don't even want to build.
Yeah.
And anyways, this is a tough market. Like, so this bodes well for people to be careful. But like going back to the metals, XME was the index. I mean,
it's one of them,
yes.
there. Like the major one, definitely big breakout here from a very long base. This is a weekly chart.
Very long base. Go back to a monthly too on that, Ivan. Yeah, I mean, very long base. Remember, this is potentially all-time highs in a market where there's just no supply, and the Green parties have got so much power. So hats off to some of the people that got these. These have been showing up on lists for 6-7 months.
Yeah.
I don't know. I don't understand the industries, but this is not going to end anytime soon because this is an under-owned sector. There's so much capital misallocated into tech growth. And so for me right now, I've been focused on seed stage, traveling, meeting companies, because that doesn't, growth is easy there. We're not competing against anybody in high cash positions, but growth stocks, is anything in tech look interesting, Ivan?
I mean, as I said, the past couple of weeks really improved the price action, and among tech,
they're all rallying into resistance at this point.
Yes, I mean, but we never know if the most common sense thing to realize is that maybe this is a bear market rally, but we don't know. Semiconductors are definitely the strongest in the tech sphere. Definitely last Thursday, the SMH, the semiconductor CTF, went up 5% in one day. I mean, you can make the argument that those moves don't happen in a bull market, but it was a pretty significant accumulation day, and we're starting to see some of them, like Nvidia, starting to work on the right side of their base, and there are some newer ones that are just breaking out to new all-time highs. So definitely some interesting action in the sector.
Yeah. Juniper broke out to like major long-term highs.
Exactly. Yeah. So definitely
there are some tech, but this compared
to
energy, no. Like if you're a true trader, I mean, I got to think all your action is on these tickers that you haven't traded or ever traded. I was trying to think. Crypto looks really strong of all tech. I think crypto looks the strongest.
Yes.
I think they're having a big run this weekend too.
Yeah, they are. So probably Coinbase is going to gap up tomorrow, and we're going to see
Yeah,
how
the
it's going to
Coinbase is
handle.
my favorite of the tech companies. I've been writing about it or talking about it to clients just because they have a leverage to this industry. If you believe in crypto, and it's a public way to play it for lazy. But I mean, you can buy the ETF that kind of track it, but like Coinbase is a
Yeah.
leverage play.
I mean,
But I think Bitcoin this weekend's trading in the high 40s.
yeah, 46% last time I saw, but yeah, Coinbase at least is diversified. So
Anyway,
they,
but those are not. I mean, you've really got to learn some new tickers if you want to trade strength and trade with the trend,
everything
because
is
copper,
basic
coal,
material. Yeah.
yeah, and a lot of people are telling me that just natural gas is a simple way to play this still. So again, I don't aspire to be an expert in this. I really can't. There's so many more dynamics at play with supply demand in these industries. So I think you got to stick to the ETFs. So XME is on my list, GLD is on my list.
Yeah, for copper, COPX is one of the
Yeah,
copper ETFs.
we talked about that a few weeks ago. So
Yeah.
yeah,
So
the
I mean,
that's-
fertilizer don't have an ETF yet, but probably I'm sure they're going to come up with one since it's been definitely the hottest sector. And
I
potash
thought
is
was Moo an agricultural and MOO? I thought that was an agricultural ETF.
yeah, but probably it involves a lot more than just potash. But yeah, definitely very strong, breaking
Yeah.
out TBA, I guess, in the same field.
Yeah.
But yeah, potash prices are up 300%. So, people are saying, brace for even higher food inflation later in the year. So that'll be another interesting.
Yeah, this is not
Yeah.
not a good time to be poor, is what I unfortunately have to say. So wow, I just feel like a dummy missing a lot of these trends, but I mean, I remember this from the 90s companies. I mean,
Yeah,
go back to the monthlies on these. These are
this is a
huge
month.
breakouts, Ivan. Wow.
They're multi-year, multi-decade breakouts.
Multi-decade breakouts. This is not just, this is really fast. This is going to lead to some kind of weird inflation.
Well,
Restaurants,
unfortunately, yes, and it probably is going to.
Unintended consequence of this rally that people
Yeah.
are so misallocated to, both in their lifestyle and in their budgeting. I mean, I got the first call from my son for the first time ever talking about gas price. Like it screwed up his budget. Gas, he drove in for spring break and blah blah blah, driving around, Phoenix, San Diego, like gas prices is like almost tripled for him. So he really said, Dad, like I need money. Like gas price, like it's a huge chunk of a young person's budget that doesn't fly and drives college homeless. So he even, when a 20-year-old notices that, I think in San Diego it's just $6 a gallon.
More than that, like I think last time I paid like $6.60, but they have some weird taxes in California that makes it more expensive. But yeah, I mean there's some places where it's even more than $7. So
well, this goes back to, everybody wants to blame Biden. This goes back to Trump fucking around with mileage. Listen, everybody wanted everything. Anyways, I don't want to get into the politics of all this, but like this is not one president. This is just bad policy and green policy now coming home to roost, and you can't get people to make stuff, and demand is strong. Like the rich spend, and people want to get out of their house after a pandemic, and so the demand's there, and there's just truly no supply. Some of these grocery stores I go into, it looks like we're in
the grocery stores,
Russia.
I mean, they're inflation play. So all of them, like Kroger and what was the other one?
That's a beautiful breakout.
Albertson. I don't know. They had a big breakdown on Friday, so I don't know what. And Sprouts. These are the three ones. Definitely, going higher. Costco also setting up near all-time highs. I mean, it's a
Whereas because
boring.
of home builders, you look Home Depot struggling because of like the home
I
builders.
mean, yeah, it's in that industry that is just out of favor right now.
Yeah, still incredible. Anyways,
Obviously,
lot of
in the
opportunity. Oh
long
yeah, there's Home
term,
Depot.
they've done
Okay.
better than the Qs. I mean, like the
Yeah.
average performance of Home Depot is like 24-25% per year, which is better than most tech stocks. It's a boring
And
business, but
it's just
it does the
amazing.
job. Yeah.
Yeah, amazing. All right, everybody. I'm good to be back. Ivan, thanks for caring. Give me a week off. We'll see everybody next week.
Yeah. See you next week.